Everybody, welcome back to the channel. So I get asked a lot of times why promoting prop firms and why I'm actually doing prop firm challenges myself and being funded with them. And obviously the biggest problem being a trader is being undercapitalized, and obviously what I mean by that is not having enough money to trade and actually make the returns on a monthly basis to actually get anywhere at a significant level. Now we see a lot of equations where people start off with a very small account, and if they trade it over a number of months, years, probably even up to 5 years, that's where they'll be in a position where they actually have enough money in their account to be able to make monthly returns to pay for all of their lifestyle, their mortgage, their bills, the car, the fuel, everything we actually have to pay for on a monthly basis. Everyone's asking that question is, how much money do we need to live on, how much do we need to survive, and when is enough money enough? It's always hard to say because everyone's circumstances are different, but if you take, so let's say, someone trading an account size of their own capital of $50,000 or £50,000, whatever currency you're in. Now, if you're making 10% per month, that's bringing in a return of $5,000. Now, is that enough? I don't know. But if we look at that being over a monthly period and you're taking that out as a salary because you're a full-time trader, you're not actually growing your main account. So that $50,000 is always static. What happens if you have a couple of months of zero or a couple of months of drawdown? That's where it gets really sticky. And do you have to take money from that initial capital, so that 50,000, and draw that down, still taking your salary? Or are you able to build a buffer in the first couple of months? And that's where it's really complicated being actually a home retail trader and then not actually trading with a prop firm. Now also take the other extreme if you're just starting out, and let's say you've managed to save up $5,000, £5,000, and you're trading that and you're making 10% per month. And that's actually a pretty good return for a lot of traders. Now, you're only going to be making just over £500 per month, so that account over 3 months is only going to grow to, let's say, between £6,500 and £7,000. Is that enough to then survive on that one? Probably not. If you look at that over a couple of years, yes, it'll get to a point where you could then start living off it. And that's where you get into that comparison between a prop firm. If you're able to go in just with an initial investment of $500 to get a $100,000 challenge account, and you're doing that same 10% per month, month 1, you've passed the first phase of the challenge. Month 2, you've passed the second phase, you're then funded. Month 3, you get 10% on that $100,000 account. You then made $5,000. Again, for initial investment of $500, you're now making $5,000 per month without risking any of your own money or any of your own capital. Now, I'm not saying trading with a prop firm is the only way to go. It's definitely an advantage if you're trying to build up your own initial investments and your own capital and then transition to having your own money if you're able to get a significant pot and amount into that one. But again, it's also knowing that they have been around for a number of years. Let's take FTMO, they've been around for 6-7 years now, and a lot of other prop firms also been emerging over the past 2-3 years, showing very consistent long-term gains and profits with a lot of the traders coming on board with them. And that's always been one of the big fears of a lot of traders wanting to get into trading, and especially prop firms. Are they going to be around long-term? Are they going to make consistent payouts? And are they going to be able to support me as a trader throughout my entire journey? Now, I can't say 100% yes, they're all going to be around for forever. We have seen over the past couple of years a number of prop firms go bust and come out as scams, and that's always the risk we take when we're actually getting into prop trading. But if you look in the description below, I've put the prop firms that I'm actually working with, and I believe they're very reputable, and any one of those would actually be sufficient to start your journey as a prop trader. Now, one of the problems with dealing with prop firms and trading with them, you are bound and confined by their terms and conditions as laid out in the contract you sign as a funded trader. Now, we know that if you're in breach of, let's say, holding over weekends or trading news, the maximum daily drawdowns and max overall drawdowns, then you will lose your account. But as traders, we know that these things are hard rules and we need to work around them. And that's also one of the problems. Traders, as always, are emotional people. We get into that fear and the greed, we try and chase some trades, push our luck, try and go for that big win. And that's when a lot of traders blow their accounts and end up in a significant drawdown and never able to get out. So if we then do that comparison with your own money, if you're in a drawdown, you can ride it out for longer. You're not actually constrained by worrying about the daily drawdown rules or max drawdown rules. You can actually ride those a little bit more. I'd always say that a 5% daily drawdown is massive. I wouldn't actually ever try and get into that or close to that to break those rules. As a trader, we want to protect our capital as much as possible, and that's one of the key things that I do as a trader, is trying to break more than 2 or maximum of 3% on any one given day. But once we actually know these rules and we know what we are constrained and bound by, it actually can be advantageous to put into our trading plans, our trading strategies, to make sure we don't risk too much. We are not holding over weekends. Let's say we're closing out before the Friday, so we're actually locking any profits or any losses, so not going to get any bigger over the weekends. We're not going to go and trade massive news events and news articles where we could get spiked in and out of trades very quickly. We could get gap, we could actually get massive amounts of spread, which obviously goes against our trades as well. So again, the rules are there to protect traders and help traders, which I think is a good thing down the long term. I've seen a lot of people over the years just come in and be very blasé about rules, very almost disrespectful of what they want to do as a trader. Yes, they can make significant amounts of money very quickly, but then very soon they go and lose that money and give it all back to the markets and then end up back at square one. But as I said before, it's not for everybody. It definitely is an advantage for me at the moment, not trying to tie up any of my initial capital or other capital into trading, keep it elsewhere, keep it earning passive incomes and be able to fund other things, and just making sure that the prop firms take their money out, regrow, reinvest, and work that long-term goal, that long-term strategy of complete financial freedom. So I hope you enjoyed today's video, and I'll catch up again very soon. Cheers!